Hello, I am Paul Harris, America's editor at Mining Journal, and welcome to this Insight panel about copper. Joining me today, we have a mixed and varied panel with Stefan Joanno, Institutional Equity Research Base Metals at Cormark Securities, Alex Sukanik, President and CEO of Nova Royalty, Jay Simulauskas, President and CEO of Camino, Eric Sanderholm, President of American Pacific, and Matt Mckenzie, Vice President at Midnight Sun Mining. Good afternoon, gentlemen. Let's start off. Let's take a minute. Please tell everybody who you are and what you do. Let's start with Stefan, please.
Okay, great. I'm Stefan Joanno. I'm a base metals analyst at Cormark Securities in Toronto. Again, specializing in base metals. And I guess just a little bit of background on me is I started off my journey with a mining engineering degree. I went on to work actually as an exploration geologist in Nevada and throughout the Canadian Shield for several years, and then actually migrated back to academics, did a PhD in economic geology, and then pivoted again actually through some contacts, ended up on Bay Street as an analyst focusing on base metals for the better part of the last 20 years, most recently now with Cormark for about 4 years.
Excellent. Thank you, Stefan. Alex, tell us a little bit about yourself.
Okay, great. Thank you for having me be here. I'm the co-founder and CEO of Nova Royalty. We're a royalty company focused on copper and nickel. So we put that together in 2018 because we figured that's where the world was going to go with the energy transition, and these are really the top two commodities. So we own the royalties on some of the largest copper deposits out there on the development side, and we're excited for what's to come in the sector.
Yeah, and you've been very active recently. Thank you. Jay, a little bit about yourself, please.
Yeah, so CEO of Camino Corporation. Started my career in Papua New Guinea at the Porgera gold mine, recognizing that the gold price had to move back in 1999, 2000. So I got behind a company called Jinshan Gold Mines. We developed China's second largest gold mine, which is now China Gold International. And I guess the theme here is that I get behind commodities that I think will have a move for one fundamental reason or another. After that, it was Western Lithium in 2008, one of the first groups into the lithium space, and developed that project by acquiring lithium. We had a project in Nevada, which is now called Thacker Pass, acquired Lithium Americas in 2015, and that's one of the leading lithium development companies now in the world. And so here I am today in front of the copper market. I think we've got a 10-year or longer cycle for electrification. And so we're building a portfolio of exploration assets in Camino Corporation to take advantage of this copper theme.
Thank you very much, Jay. Eric, over to you, please.
But I've been in the exploration and mining business, mainly gold and copper and silver, for about 40 years now. I worked for Newmont for many, many years as an exploration manager for the Western US. I'm now with American Pacific. I'm the president and essentially the chief geologist of the company. So I do the drill planning and things, but I keep my finger on the pulse of minerals because they really do affect my life, my community's life. I live in Elko, Nevada, so I'm kind of in mining central, but I've been in the business for quite a long time.
Thank you, Eric. And Matt.
Hi, Paul. Thanks for having me. My name is Matt Mckenzie. I'm the Vice President of Midnight Sun Mining Corp. We've been in Zambia working on a copper project since 2013, where we acquired an option on it at that time after extensive due diligence. Previous to that, I was with Roxgold when we made the Yaramoko discovery in Burkina Faso, which is now in production. And Roxgold recently combined with Fortuna Silver, a large transaction. And prior to that, I was with BMO and their capital markets group.
Thank you, Matt. Now, we've got a breadth of experience and different opinions and different positions in the industry here on the panel today. So we're going to have, I think, a very diverse and stimulating conversation. But to kick things off, I'd like to take advantage of the fact we've got Stefan, one of the most recognized analysts on the street with us. Stefan, can you sort of give us your overview of the copper market at the current time and what's happening, please?
Sure. Yeah, happy to. Yeah, really, what really is compelling to me about copper is obviously exciting right now. 425 level, testing upwards of 480 earlier this year. But really, what really gets me excited is the medium to longer term outlook. And really copper, it's not just a copper story, it's really an all base metals story. Copper is a great proxy though, similar themes across the whole sector of base metals. And what really stands out to me is when you look at sort of the recent new supply that's come on, that really stands to keep the market in give or take supply demand balance through, call it 2023, 2024. But when we get beyond that, we really start to see a significant supply gap emerging. And we look at this, so call it the next generation of new projects that come in to continue to fill that gap. They have fallen way behind just on a lack of capital spending over the last, call it 10 years. And I think it's really shaping up for a significant supply deficit as we move through the late 2020s and into the 2030s. And obviously layering on top of that, the whole idea of electrification and green energy, that just stands to make that deficit even bigger. So, when I sort of think about copper and where it is right now, I would argue, current floor pricing is very much producer dictated. And we would look at the established producers out there right now. We saw a few years ago when copper prices dipped, a lot of big established producers did start to have problems that call it sub 250 a pound copper. And I think even to this day, you could argue that, to keep a meaningful amount of existing production on the table, you need bare minimum 250 to 275 a pound copper in today's market. Where it gets interesting, though, is when I look at the list of the next generation of projects, they are inherently, they're big projects, but they are mining lower and lower grades. And because of that, the incentive pricing to get those next generation projects off the ground is probably something on the order of 350 a pound copper. And so, I think that's a very interesting sort of thesis for just, underlying minimum floor pricing. And then if we take it to the sort of one step further and think about, well, what about the ceiling price aspects of it? And I think that's really when the whole idea of carbonomics sort of steps in and the incremental new demand coming from new industries, namely, electrification and green energy. So, I think bottom line, something's going to have to give here, and it's going to start with the copper price itself. And, just one interesting number is you look, back in 2019, the 10-year forward-looking supply deficit was pegged at about 4.2 million tons a year in copper. And that's on a, I call it a 24 million ton a year market. And we look at the same number today, 10 years forward, now the supply deficit is forecast about 8.2 million tons. So basically doubled in the matter of 2 years. So again, something is coming down the pipeline. Not good from a supply point of view, but very good for a copper pricing point of view. That's all medium to longer term. Obviously, the short term is where we are today. And what does that mean? And I do anticipate that, there'll be some volatility here over the next months and maybe year or two. And really, we've seen a lot of sort of stimulus come out of China on the back of COVID and stagnant supply out of the mines given COVID considerations. But again, one of the big drivers of the copper bull thesis is this whole electrification. And, I think it's important to recognize that the EV revolution is still in its relative infancy. And I think it's not until we get out, say, 4 or 5 years before we really start to see fundamental supply, in terms of you and I going out and buying electric cars and the whole bit. So I think, while I think copper prices are going to remain relatively strong compared to historic levels, I think it's not until we get out to the later part of this decade that we really see that idea of really strong for longer copper going forward. And, put out there, Goldman Sachs is out there with a long-term copper price of $6.80 a pound, and Wood Mac, pegs incentive pricing in the future at around $5.50 a pound. So some big numbers out there. And obviously, if you're in production, or even if you have a development project, even a low-grade one, they all stand to look very strong economically at those levels.
Well, thank you very much, Stefan. Carbonomics, it's the first time I've heard that phrase. Quite a nice one there. Let's get into our Q&A, and let's stick on the subject of prices. Copper's down about, let's say, 10% from its highs it reached earlier this year, but still significantly above $4 a pound. So historically speaking, still very healthy. How you mentioned a couple of figures there from some of the banks and whatever. How high can copper go, and how quickly do you think? And Stefan, let's start with you there.
Yeah, again, I think over the short term, I think the general, when I look at analyst consensus, for example, and I think where I see a lot of technical reports, feasibilities and things, we're seeing the long-term copper price behind those models and studies creep up. It used to be that, 275 was kind of the benchmark number for a long-term price. And I think now the idea that 325, if not even 350, is very reasonable. And again, I think that's, if anything, should be viewed as a very conservative number. Obviously, if a project's going to work at 350 a pound copper, that should hopefully shield you from a low pricing environment in the future, or what would be a low pricing environment. But again, like I said earlier, I think as we move towards 2030, I think I agree. The idea of $5 plus copper is not crazy by any means. And there's a lot of fundamentals to support that.
Thank you, Stefan. Alex, let's bring you in here. Obviously, as a royalty company, you do a lot of calculations and forward price estimates and things like that to help you decide your investment case for this asset or that asset. How do you see the copper price playing out, and in what kind of time horizon? I mean, do you agree with Stefan's sort of $5 per pound being very reasonable in the not too distant future?
Well, to be honest, we haven't even figured out what it should be. I mean, when you look at how hard it is to build a big copper mine, you're talking billions of investment, years of commitment. Even for like a major company, it's a massive, massive commitment. This is like the one thing they can do for a 4 to 5, 6 year time frame, and it requires a huge capital requirement. I don't think 350 is anywhere near enough for anyone to think about building anything. I'm not sure if $5 is enough for anyone to think about building anything. I mean, so when you look at the big companies right now, they're doing absolutely nothing. I mean, that's probably the best assessment. Everyone's paying dividends. And so
I would just add too that you can't just turn a switch. So I agree with the incentive pricing of let's say it's $3.75 or $4 long term, but to turn those mines on, to turn a brand new mine on that has gone through the late stages of feasibility, you're still talking 4 to 8 years to get new production. So the copper price is going to be dictated by the time lag, to bring on new projects, number one. And then number two, just identifying those, the next round of projects that will be developed. And that's where Camino is on the exploration side. We think that this next cycle is very much an exploration story.
Well, that was going to be my sort of follow-up question. I think Stefan mentioned that the incentive price is, let's say, $3.50 a pound, but we've been well above that for 6 to 9 months now. And as Alex pointed out, nothing's happened. So how realistic is that as an incentive price? Eric, you're an explorer. What do you think about what the incentive price should be? And let's put it into exploration terms. What kind of price would you be looking to have in an economic study? And how do you judge that now?
Well, it's tough right now. As I mentioned earlier, the majority of the copper is coming out of some very, very mature mines. So the production costs are going to dictate, I think, your basement price or your floor price. And I think that's going to stick around $3. That's in my mind. I think you could possibly make it. I mean, people were making money 2 years ago at $2.50 copper. So you can do it, but your margins are going to be very, very tight. I think in the future, we're going to be dealing with, I really, really don't see any big mines coming on. Everyone's bringing up excellent points. It's very tough to get a big mine going. Plus, it's hard to find one. In places like Mongolia and they've just priced themselves and taxed themselves out of existence. So a lot of the places in the world that have world-class copper deposits are just not going to come online. It's going to take a long time to get them online. It's going to take a total just a geologic shift, or I should say a geopolitical shift in getting these things online. So you're going to have continued production from Bingham Canyon, from Chuquicamata, from Escondido. You're going to have that kind of thing, but that's just going to drive the prices up. So it's a balance right now of supply and demand, and copper is the perfect example of that. So I see $5 copper in the next 6 months, and I see $3.25 in the next year. I think it's just going to go up and down. The housing bubble in the United States right now is going to pop. And when that does, copper is going to respond in kind. It's going to drop 15 or 20%. So you just have to kind of to gauge the market a bit. But I think right now it's on an upward swing. It should be $5 within 6 months.
Okay, Jay, I'll bring you. Sorry.
I was just going to say, yeah, the other point I want to make is, I mean, let's just go back in history, to 2001 when we were in another, copper cycle there, and it was driven primarily by, the Chinese economy. copper started that decade at, under $1, around 60 cents. And when it finished in 2011, it was, I think it hit a high of over $4.50, $4.60. So that was a 6-time increase, in pricing. And, you pick the starting price point in this cycle, but it won't surprise me to see that type of price rise for all the reasons that we're saying here. And we haven't even included the additional costs of ESG requirements and everything else, in the future market. So, I'm, this is why we're in the copper space, and we're in a position where we're trying to acquire as many of the good assets as we can, ahead of what we think is going to be a very robust copper price and copper market.
Well, how high can copper go is a big question. There's so many factors that go into that it's impossible to crystal ball an exact time phase. You read all of the analyst reports and get your hands on, and the consensus is it's an upward trajectory. Whether that's immediate term, intermediate term, long term, it's all going the same direction. Supply demand is what it is. And you make forecasts about continued electrification, and I'm hard pressed to disagree with the electrification and the continued need for copper going forward. We're just going to see, larger and larger. And the nice thing about copper, as opposed to the other sort of quote unquote battery metals, is other things, the chemistry for industrial batteries, for example, is still getting fine tuned and worked on. And what is that ultimately going to look like 10 years from now? It's hard to say, but the demand for copper to support all that electrification, that's going to remain, and that's not going to be supplanted by any other metal anytime soon. So the case for copper is very strong, and I think that's the key feature. Whether it's $5 copper, $15 copper, somewhere in between, it's a strong place to be. And as an exploration company, that's really what I want to be looking at. So I think we're in the right place for that. The other thing about copper is you've got the macro elements that are so hard to forecast. Election cycles around the world in copper producing companies, and then in major manufacturing economies and copper using economies, things like that can create upward bubbles, downward pressure. And these are simply things that sitting here today can't predict, but I just have to maintain the confidence that copper is going in one direction ultimately, and that's up.
Stefan mentioned carbonomics, decarbonization of the sort of global economy and transportation system, and that's obviously forecast to have a big impact, positive impact on copper. And as Stefan mentioned, a growing supply deficit from, I think you said 2024 onwards. So what kind of impact will that have on copper exploration companies such as Camino and American Pacific? Do you foresee a situation where you can have the downstream buying into the junior coppers to ensure they've got first dibs on supply in a similar way as has happened in the lithium space?
Yeah, so there's a number of topics there. First of all, when you see these copper price moves, the first companies to move are the large producers, and we've seen that so far in the marketplace. We haven't seen that yet in the exploration space, and that comes sort of next in the cycle. And so the market will start to recognize the junior companies as being some of the best places to invest ahead of a copper cycle, because they're really the groups that will identify these new opportunities for copper production along this timeline that Stefan is saying in the next 5 to 10 years. Having said that, new discoveries, the value of those discoveries is recognized immediely, at the drill tip once a new drill program identifies something that is recognized as a discovery. Yeah, in terms of decarbonization, the copper market is going to have to, supply that. I look at copper as the enabling metal for carbonization or decarbonization, it's a metal that connects renewable energy, which is whether you're producing from wind or solar, to the grid, and finally into the electric car and electric transportation. So copper is the enabling metal. And as a copper producer or copper developer or copper explorer, we will also have to build our businesses along this decarbonization platform. And you're seeing that in the copper industry, especially with major producers, groups like BHP are now developing renewable energy sources for their projects like Spence and Escondida. They're developing seawater pipeline systems, from taking water now from the ocean to an elevation of 3,000 meters. They're making those sort of ESG type decarbonization investments. And so, the copper industry is going to basically be providing the metal for decarbonization, but it's also going to be decarbonizing our production as well.
As an exploration company, the price of copper today, tomorrow, it doesn't really matter to me. The reason for that is I want to think like a major. What does a major want to see? And they're not looking at the price tomorrow. Sure, the trading arm and the sales and that are, but their exploration side, their commercial side, looking at making acquisitions, they've got a long-term time horizon. They want 30-year plus mine life. So I have to take that I want a big deposit. Whether it's $5 copper tomorrow, $4.25 today, $3 next year. The major copper companies want material, they want feed, they want projects that are their size and scale. So, I try and take the same mindset when I'm looking at projects, analyzing projects, like the one we have at Midnight Sun. We recognize the size and scale is there to appeal to a major, and that's our ultimate goal as an explorer, is find something that a major will be mining. So, the relevancy of the copper price today is less so for where we sit. Where it does have an effect is the ability to raise funds. If there's more attraction to the copper market, more froth going on from retail investors, there's more articles about the future of copper that's positive, and more analyst reports supporting the upward price trend. Well, great, we'll get immediate value bumps in our stock price and our ability to access and raise funds, things like that. But again, it's for us, we're trying to play a longer term game here and identifying something that appeals to a major that's going to last through multiple copper cycles. And these mines get to be that size. We want to find a generational mine that lasts multiple copper cycles. And that's really the beauty of exploring in the copper industry and the base metal industry, is you get these truly generational mines that do come along. Yeah, it's easier said than done to find them, but they exist, they get found, they come online. And yeah, of course, there's a time delay and a time lag in getting those up and built. But you look at something like Kamoa-Kakula and the DRC, they can be found and developed in a pretty tight time frame, and the payoff is there for investors. So that's what we are after and what we're trying to do, and why we've partnered up with Rio Tinto in Zambia is we believe we can find the next world-class mine that appeals to them and will last through multiple copper cycles, multiple base metal cycles, multiple mining cycles. So the prizes are well worth it ultimately.
I'd like to bring in Eric here. Same question. You've obviously got a relationship with Rio Tinto, one of the major copper suppliers. So you're seeing sort of bigger companies coming into the exploration companies. How far do you think? How deep do you think that will go?
Well, I think that companies like Rio, and just it's based upon where your properties are. If you're in, 40 miles south of Butte, Montana, which was a heck of a deposit, and we all know about that one, the Anaconda mine for years and years, you're going to see an influx, and you're going to see, I believe, the bigger companies taking a bigger risk rather than inheriting properties that are that have a resource or that are well drilled. They're going to start using more of the scientific approach to it to get in early stage, because down the road 15 years, there's not a whole lot in the pipeline. These companies they're mining big giant pits, and they've been mining these big giant pits for as long as you and I have been alive. So there needs to be some new influx of copper, not just recycling, but it's going to be a metal that's never going to be replaced. Aluminum's going to come along too, as I think a lead lag. I think you'll see aluminum, any conductive metal is going to come along here relatively quickly. But right now, the big companies are starting to go into the smaller companies just to take a chance on things. They can get in cheap. They can spend the money as judiciously as they want. There's no real expectations except down the line 10 or 15 years. But these big companies are thinking 10, 15 years down the road.
Thank you, Eric. Interesting comment you made about perhaps a refocus on North America. And to sort of bit more context around that, Latin America is a copper production powerhouse, but the ability to increase production from there is sort of taken a knock in the last year or so, given that the governments in Chile and Peru looking to potentially raise taxes and maybe even state participation, which raises questions and perhaps doubts over the future investment climate in those countries. If the government does increase significantly in those countries, how will that impact the broader world of copper investment? And Alex, let me direct this one to you first. You obviously look at a lot of projects. Is the potential for increased government take in Peru and Chile, is that changing your analytical model and how favorably or not you look at things?
I think, listen, there's obviously been enough press on this. The view we've taken it so far is, listen, these two countries together account for over 40% of global copper production. That's a much higher percentage in copper than OPEC controls in oil. So just for perspective's sake. So this isn't the place where something changes quickly. When people talk about new investment in other countries, I mean, the time frame for exploration to production in a new copper mine is 30 to 40 years. So, as much as you need to understand what the governments are doing, you also have real logistical issues in actually acting on those changes in any kind of reasonable time frame. And so I think that, look, these are established jurisdictions. They're going to come to some sort of new regime. I think most people at this point expect that there will be a higher share going to the government in terms of the economic benefits. I think, to be honest, that was expected. If you looked at what happened with COVID, we here in the US and Canada have been insulated, really from the worst of it. If you ever spend any time in Latin America, it's a completely different world. So I think the biggest question everyone has is the extent of the changes. And so, yes, if the results are sort of significant enough in terms of deviation, you will see people looking at other countries. But at this stage, I mean, just the way we see it, I think the odds are against anything fundamental happening, because I think these countries also depend significantly on the mining industry. So my guess is that something gets worked out, which is relatively acceptable. I mean, when you look at size, in copper, you need size. The really big deposits are sitting in that Latin American triangle, Chile, Peru, Argentina, and Ecuador now as well. If you go to North America, US has a few, Canada doesn't have anything of size. Australia doesn't have anything of size. So the geology also forces you to look at that part of the world very seriously. So it's not as simple as just saying we're going to go somewhere else. So I think that kind of time will bear out exactly what it looks like.
And I suppose that'll be another factor underpinning a higher floor price in copper. Oh,
absolutely. I mean, listen, this industry is so difficult. I mean, I give tremendous credit to all the management teams out there, kind of at whatever stage of exploration, development, production they're at, because it's so enormously difficult to have a viable deposit that actually advances towards something real. And now it's only getting harder because you have ESG, you have government, you have social relations. It never gets easier. So yeah, it's difficult to see the floor price dropping here. I think the direction is pretty clear.
Well, that's a good takeaway from if there's only one takeaway from this webinar, that's a good one. Jay, let me bring you in. You obviously operate in South America, in Peru. Well, what's your take on how things are developing there?
Yeah, well, I mean, look, I mean, ahead of a copper cycle, you've got to go where the copper is. And Chile and Peru clearly are the dominant copper producers in the world. And it's because that's where the geology is. We talk about size, but you have to look at grade as well. So grade and tonnage, if you look at the last cycle, I mean, that was Las Bambas, Constancia, a few others out of Peru. Quellaveco is being built now. Mina Justa is being built right next to us. I mean, these are all the newest copper mines being built, in a flat copper market. We still believe that in parts of Peru are still very vastly underexplored, which is where our focus is, and that there is potential, and that we think we have geological systems that will hold in any market, up market or down market, because they're big geological systems that can host large new deposits, which obviously is value enhancing for Camino, but we do believe that these are systems that would be value enhancing for the copper market as a whole to make a discovery on these projects.
Thank you, Jay. I want to stick with you for the next question. The copper market's going very well, but it tends to sort of take time to trickle down to the junior explorers. So what is the kind of message you're receiving from the investment community? And if it's positive, is the money there to back that up, to enable you to raise the money, to do the work you need to do, the many years of work you need to do to bring a discovery through to becoming a deposit and perhaps into development at some point in the future?
Yeah, so the investment climate still has to, as you say, trickle down to the juniors. We've been able to raise capital. We're well funded to do drill programs this year on two of our main projects, which is Los Chapitos and Maria Cecilia. And as I mentioned earlier, I mean, we're building a portfolio. So we just closed a transaction with Denham Capital in the last quarter to bring on yet another large geological system, which is the Maria Cecilia porphyry system in Ancash, Peru. It's always hard to raise money. I think in the mining sector, but we've managed to find good shareholders, institutions in particular, that have supported us for this round of financing and can certainly follow in future rounds. And their focus is on new projects, new discoveries. For the reasons we mentioned earlier, they think that the market, the copper market going forward is all about new discoveries and taking exploration assets through to development and production.
I've been working on this project since 2013. We've received a lot of, I don't say negativity, that's not the right word, but pessimism from the investment community about base metals for a number of those years. But we've really seen that switched around of late. You're always going to have your gold bugs and your silver bugs and things like that in the investment space. And I don't argue with them having their beliefs whatsoever. But I think the mainstream belief amongst the investment community about copper and base metals and the bright future for those is just continuing on the upswing. And you're going to get more and more investors looking for places to access exposure that's still undervalued, and exploration is ultimately going to be the place for them. I think we're going to see some pretty deservedly strong valuations for the major copper producers. So investors looking for a little bit of a bigger payback are going to come downstream and look for explorers who ideally are going to identify and discover the next big copper mines in the world. And they're there, and there's going to be a lot of global pressure to find them. So I think that investors are just now sort of sitting up, taking note that, okay, there's not a ton of high quality exploration plays out there. So they're starting to sift through and look for them and identify them. And we're going to see the valuations responding, throughout the market to copper plays. And that's exciting. Exciting time after a fairly long haul where copper exploration companies were few and far between, and in part because it was very tough to access funding for those. So it's nice to see the pendulum swing the other way now, and I think the investment thesis of copper and base metal exploration is very strong, and the word of that will just continue to spread.
Eric, same question for you. What's the kind of message you're getting from investors, and are you getting access to the funds that you need?
We have been opportunistic, and we have been somewhat lucky in the last 2 years. We have raised money when we needed it. We're well funded right now, but it comes in waves. In the junior market, literally within 2 or 3 months, you can go from, woo, we can get some money, and you get checks coming in from investors, to, oh my goodness, we need to cut our salaries in half. So it has been good. The last 18 months have been up and down, but the money is coming in from the big companies. And working for Newmont as long as I did, I was a part of the big company that was investing in the smaller company. Now I'm in the smaller company and expecting some investment trickling down. But it is getting there, for all the reasons we've been talking, is that we have the boots on the ground, and sometimes we do have really nice projects. And as long as you market them well and you actually have some substance to it, the money will come in.
Excellent. Stefan, I'd like to bring you in on this question. You obviously work for one of the investment banks, and so you've got a pretty good overview of the financial sector in general. What's the sort of message you're hearing in the meetings that you have? Obviously, investing in exploration, copper exploration, long timelines. Not all investors are patient enough for that sort of 5 to 10 or 15-year window. What's the kind of messaging you're hearing?
Yeah, and I think that's part of the challenge. I'd say overall, there's been a positive swing. I think anyone entering this year, the idea that copper was going to be, averaging $4.25 plus a pound through the first half of the year would have sort of thought might be crazy or a bit aggressive. And lo and behold, here we are. And that's brought a lot of new eyes into the space. And what's really nice to see is that I'd say for the first time in a number of years, the market is now paying attention to and paying for, good exploration stories and good discoveries. So there is money available finally for these companies. Again, a few years ago, even if you had a great project, you had a great drill hole, it more often than not, unfortunately, fell on deaf ears. So there is attention now to the space. I'd say the one challenge, and again, it really comes down to who the investors are. I think some of the institutional investors are in a good position in that they tend to have a slightly longer time horizon. And again, they're looking out a couple of years and recognize what we talked about earlier about, the growth outlook for the copper price. Unfortunately, we saw copper hit an all-time high of kind of 480 back in May. It's since fallen to, 425, and I kind of say that's only 425. It's still a fantastic price, but nevertheless, it's come down, and that downward momentum has spooked some of the more sort of in and out, quote unquote, retail investors from the space, which again, there's always going to be that volatility. But that stands or has so far sort of, kept things at bay to a certain extent. But I think long-term investors realize that the copper price is going to be a lot stronger going forward and are willing to start to bet on exploration development projects now more so than they did a couple of years back.
Thank you. I think it's incredible how quickly we become accustomed to copper prices over $4, and when it dips down a little bit, we go, oh no, it's a disaster. Yeah. And within a broader context there, some of the big diversified miners have been posting record profits and record dividends. So it's a very healthy time for the producers. Now, we've talked a bit about sort of Chile and Peru, but with higher prices and perhaps political risk increasing in Chile and Peru, or country risk, what other jurisdictions are starting to come back onto the map in terms of copper exploration? What do you see there, Stefan?
Well, I think it's still political risk is still front and center. And I think if anything, it's gained sort of even additional attention with the whole idea of ESG and sustainability. Just on the Peru and Chile thing, I think one thing to recognize is from an economic point of view, those countries are being viewed as riskier now with, the potential for higher taxes and royalties. But from a social license point of view, they're still considered, fairly high stature mining jurisdictions to be in and safe jurisdictions. And again, like a number of the other speakers have mentioned, that's where the copper is. So if you're looking for big copper projects, again, Mother Nature doesn't pick the politics where it puts the deposit. So you kind of have to go there first and deal with everything else after. But in terms of other countries, again, I think ESG has really come to the forefront as a very key metric for investors looking to invest in companies. And the way I look at it is sort of the new trifecta of, what makes a good project a good project. And back in the day, it was all about grade, tonnage, plus or minus infrastructure. And I think now, it really comes down to, things like a low carbon footprint, being in a favorable jurisdiction, and also having a project and maybe focus on a metal that's of strategic importance, something, a project that can offer, scalability or certainty of production over long periods of time.
Okay, I'll bring in Eric there. I mean, you obviously sort of focused in North America. So are you benefiting from that, perhaps perception of some more stable jurisdiction, less likely to have dramatic changes? And also, let's bring in Stefan's points about ESG aspects and sort of low carbon footprint. Is that something you get quizzed about just as much as what the potential grade is or the potential sizes of your project?
Not really. The ESG doesn't come into the conversation that much, at least right now. Obviously, we're an exploration company, so we're years away from any kind of production. But yeah, that in the United States, I think it's a little less acute, at least right now. But down the road, for sure, you're going to be dealing with those types of issues. We do our best, obviously, as an exploration group to minimize our impact on everything, but we still realize we have diesel drills and other things that we've got to use until the technology switches that out, maybe in 10 or 15 years. But I haven't seen any real pinch when it comes to permitting, and I haven't seen any real. The COVID thing really gave us a bunch of cramps for the last 18 months. But other than that, I think things are pretty fluid. And I just think that obviously Chile and Peru, and I worked in both countries 20 years ago for Newmont. Those are where the big deposits are. It's just, I think people feel at risk 15 years down the road, and they would prefer to be someplace like the United States or North America anyway, that offers them some security, at least false or real, who knows exactly, but down the road, but that's where they want to be. So you do see a lot of money coming in from Rio into the United States right now for projects that were not very advanced. 10 years ago, they probably wouldn't even be touching some of the projects I know that they're drilling because they're taking a risk to stay in the US.
Okay, that's interesting. Thank you. You also mentioned sort of technology. So I'd like to sort of bring that into the conversation. I think a couple of you mentioned, declining grades. It's one of the certainties in the industry. Mining grades decline, and so mines today are producing at much lower grades, even sort of 10 years ago during the last copper cycle. And with the added factor of sort of decarbonisation, the decarbonisation of mining coming in now as well. What sort of new technologies are you hearing about or seeing on the horizon that can help, reduce costs, make mines more productive, and potentially reducing carbon footprint in the future, and indeed for exploration as well? Let's start with Alex. I mean, again, you have a broad overview of the sector. Where are you sort of seeing advances potentially being made?
Oh, listen, I think this is something that's of keen interest to the whole sector. I mean, I think there's multiple things the industry has to figure out. I think given the difficulty in building new mines, I think people are also trying to extend the life of the old mines. So there's multiple technologies out there right now that helps you process previously unminable material. And I think that's definitely become a big focus for people. Then there's issues of tailings, there's issues of arsenic. So, the thing is, mining, it's a sector which is essential, but it clearly also has a footprint. So anything that we can do to reduce the footprint of the sector, whether that's desalination technologies, whether that's processing old dumps in large mines, which are previously uneconomic. So all of that, I think, these are really critical initiatives kind of for the industry to undertake, for sure.
Thank you. Jay, let's follow up with you. Alex used the term footprint, and the environmental footprint of a project can be a flashpoint for communities. Peru is one of the countries where that has happened in the past. How do you see this, as you advance your projects, what kind of steps are you taking to sort of manage footprint and to be able to communicate that to your sort of host communities that, look, hey, this is going to have a manageable footprint, or the impacts are going to be minimized, mitigated, that kind of conversation?
Yeah, so we're starting, in an exploration capacity, but ultimately we have a vision for development and production, and I've taken projects through all of the cycles historically. So when I look at a project like our flagship Los Chapitos, we acquired the project, got involved with the company because we like the jurisdiction that it's in. It's near the ocean. It's 15 kilometers off the ocean. So we envision using seawater processing. It is about 100 kilometers away from Peru's largest wind farm, which is Marcona. So we expect, and there's a grid that goes over our property that connects with that wind farm. So from that standpoint, we expect to develop that project with state-of-the-art, energy sources and processing. And we're not really new to this, because there's a project north of us, Mina Justa, which is a $1.6 billion investment, and they're doing this. They're using seawater to process. They're using they're tapped into the grid. So when as an exploration company, we do envision developing these projects with state-of-the-art technology, but we have started an ESG strategy even at the early stage that we are in the development cycle. We've connected with a group called Digby out of the UK, which has an ESG platform, and that is sponsored by major institutions like BlackRock and Dundee and BMO Capital Markets. And the thesis there is that there is billions of dollars, hundreds of billions of dollars of investment that can find its way into what are considered sustainable, the energy transition. And mining should be included in that. Mining should be included because we have the enabling metal, which is copper, to make all of that happen, including lithium and cobalt and these other, what we call electric metals. So as a strategy, as a corporate strategy, Camino is adopting an ESG strategy at this early stage, at the exploration stage. What it does is it gives us a guideline in terms of what we're doing right and where we're deficient. And it compares us, to what we're doing in Peru to everywhere else in the world, what's happening in Africa, Australia, Canada, United States. And so we can benchmark our strategy. And we look at as the right thing to do. It helps me manage the company, but it also, it gives us an advantage in terms of our business development, because we think we're one leg ahead in terms of acquiring new projects and having this platform, which ultimately, as we grow our company through development and production, or we get acquired by the larger companies, they're gonna require this ESG execution, and that's what Camino is focused on. It's one of our operating strategies.
I think new technologies in the mining and exploration space, I think it's where our industry's got to go. I think the focus on ESG really goes hand in hand with technology. I think that's the space where we can have the largest breakthroughs and some pretty large impacts on how we operate, how we work. Of course, things like the use of seawater with BHP and Antofagasta, things like that are great steps. Preserving aquifers, that's great. And I think the technologies have to be dependent on jurisdictions. What do you need where you're working? And when you're in exploration, of course, your exploration budget is so important, and you want to protect that for your shareholders, make sure it's used well. So if you can tie that to more sustainable practices, well, that's an absolute win-win. So starting to look at things like more efficient drills that take smaller vehicles to mow them in and out. So you have lower footprint there. They're more efficient, running diesel until we can supplant diesel with solar, wind. Who knows what the future could hold? But until then, we're stuck with diesel. Use as little diesel as possible. Great, lessen environmental impact, lessen cost as well. Things like the drills that recirculate water, preserve water, so you're not having to draw on that resource. So I'm seeing improvements on fronts like that, but I think we're on the verge of having a big move forward in that space, and I think the focus on ESG are going to be a big driver of that, and I think that it's going to ultimately, money talks, and I think that money being saved while improving ESG is really perfect, and I think we're going to see that across the board for all levels of exploration, development, and mining.
Thank you. We're coming towards the end now, so a sort of quick round of final comments, and I'll start with Stefan. Outlook for the next 12 months for copper. What's your view there?
I think relatively strong, 420, I'd say somewhere between 375 and maybe upwards of 450 on a good day. Some intraday or interweek or intermonth volatility through that period. And I think really just sort of shoring up a firm baseline for that sort of stronger for longer, medium to longer term copper price like we talked about before. So, and again, I was even 375 copper. I mean, oh my God, some guys might say the sky is falling. That's still a very strong copper price for established producers today that, like we talked about earlier, we're making money even at 250 copper. So, yeah.
Excellent. Alex, a key catalyst for you and Nova in the next 12 months?
Well, listen, I mean, we buy royalties on really some of the largest development projects out there, and we're also buying producing royalties now as well. I think as the sector develops and confidence begins to really return to the larger mining companies, that's when you'll see capital investment. But I think for us right now, we don't think this is something that will happen immediately. I think it's going to take a really strong base in a much higher copper price environment. You're going to need to see some clarity on the geopolitical front in Chile and Peru, and just see how the governments are oriented. I mean, I think that what's interesting is, what Stefan is saying about the copper price. I think this is your situation before there's any real clarity. But even once you have clarity, it's going to take a lot of investment and assurances to get the investment you need from your mine. So we're probably looking at a pretty long cycle here.
Okay, thank you. Jay, catalyst in the next 12 months for you and Camino?
Yeah, so the best value is at the drill tip for any mining company. We start drilling next week, which will be the beginning of September, on our Los Chapitos copper IOCG project. And then we'll follow that up later in the fall on our copper porphyry project at Maria Cecilia. So lots of drilling results to come this fall. So we're in real time, and we expect our momentum to follow.
Excellent, thank you. And Eric, catalyst for you at American Pacific over the next 12 months?
Well, we have drilling programs, 3 drilling programs, one silver gold, another one's just straight gold, the other one's copper gold up in Montana. So it's going to be based upon drill results. The programs are currently being permitted and or in progress. So it's going to be the results from the drilling that'll be the catalyst for additional effort by Rio Tinto as they move forward with our copper project. So once again, as Jay said, it's going to be defined by the drill.
I'm very excited for the next 12 months of Midnight Sun's development, and I've always believed we're going to be a overnight success that was a long time in the making. We've got Rio Tinto operating our project right now, 506 square kilometers in Zambia, smack dab to First Quantum's Kansanshi mine, the largest copper mine in Africa, just a little bit south, on the Zambian side of the border from Ivanhoe's Kamoa-Kakula, which is ramping up. So we've got some of the biggest of the bigs right in our neck of the woods, and we believe we can be with them size-wise. We just had an election in Zambia where a pro-mining president was elected, so that's a very exciting piece. There's $2 billion worth of expenditures have been announced by a couple of major miners in the region since the election. We're going to see a huge boom, and people often associate copper mining with Latin America, and rightfully so. There's tremendous production there, but the Central African Congo and Zambia copper belt, you're right there with Peru as some of the biggest jurisdictions in the world for copper production, and I think that's going to be ramped up here over the next 12 months. So there's a reason why Rio Tinto is working our property and doing a tremendous amount of drilling, and we have a very large property that necessitates a lot of drilling. So we're going to be having a lot of work done over the next 12 months, and I'm very excited to see what the results hold.
Excellent. Thank you. Well, unfortunately, that's all we have time for today. So I'd like to thank Stefan, Alex, Jay, Eric, and Matt for joining us today. And stay tuned to mining-journal.com for more insight panels in the future. Thank you, everybody.